What's happening, guys? We have another Sunday video with Chris. Unfortunately, you're stuck with me again. They did a fantastic job last week. So thank you, Chris and Stan. A lot of great comments, and I think people appreciate kind of having that different kind of viewpoint. I know Stan's a little bit like me as far as trading and small caps, but for me personally, I enjoy learning a little bit more about options, being able to ask the questions and finding some of these better ways, especially when premiums are going crazy, and kind of understanding how that unwind takes place. So we were able to turn that into some nice trades this week. Preparation, we've been talking about obviously SMCI for weeks, and that trade came to fruition. We were talking about MSTR, a little bit tougher, less liquidity, and I'm sure the options were probably a much more illiquid than even the stock. But still, if you have a high conviction trade, you're still going to be able to capture that big move. But this week we had Nvidia, same setup, same situation, and I basically had two main watches all week. And I was not going to allow other small caps to kind of take my attention away from it, because I knew, and as we've discussed multiple times, my real goal with trading at this point is to focus on the SMCIs, the MSTRs, the Nvidias, and potentially coin again in the coming weeks. So I thought that was fantastic. And just like your Mara trades and all of that, when these premiums just evaporate and we get that crazy downside after some ridiculous move up to the upside, as we've seen on all pretty much 4 or 5 of those. So for me, Nvidia was obviously the trade of the week. I've been talking about refund. I had some investments turn over. I had like a self-directed IRA because I took some money out of the market because I didn't trust myself with a large portfolio. I don't know what I'm doing with that. And so then I ended up bringing it back in, got my options already just in time. I missed SMCI options, but I did not miss Nvidia. So that was a big one. And I was prepared for that. And one of the biggest things that I feel like where I shine is sort of that range anticipation. And we talked about that on SMCI, maybe anticipating an 1100 kind of push. We got a 1080 push. And the goal was for a flush like 780 to 820. And we got like 793 or 794 right in the middle. And I remember like Tim Parker saying it, you've said it. But if you can turn that into trading options, that's lethal in the options arena. So that's where I'm saving them, because I know that if I trade options every single day, I'm probably just going to piss away lots and lots of trades. So for me, I'm waiting for the A+ opportunities with that range anticipation, and it's an option. So you've got limited risk. Obviously, you can't go crazy size on some of these zero-dated options, but it seems like it's becoming a theme. So, we've talked about it Thursday, Fridays. Are you thinking this is going to keep up with all these overextensions?
Yeah, I just think it's the new market that we're in, where options play such a role. And after 2020, 2021, after the Tesla run and everything, if you were to sample 100 people who are just trading, like retail people, how many of them are doing options now versus pre-COVID? And now it's probably 50%, and pre-COVID it might have been 10% or 5% or something. So I think that and retail is not the only place where that options volume is coming from, because as retail comes in, as the option volume in general goes higher, now those options that used to be too illiquid for funds or things like that to play, now they can play them. So the option market over the last couple of years, it's really become like the tail is wagging the dog, especially in certain names. And so things like Nvidia, SMCI, Coin, Tesla, you can see these are the names that consistently have the highest option volume, the highest dollar amount traded, and those are the ones where options will drive it, as opposed to something like let's say Dell, or a more standard name where the options are not something that usually drives it, maybe after earnings or something. But yeah, so these setups that you are so good at just really recognizing when they're coming, anticipating when they're coming, and now that you're using options to actually capitalize on that, it's like you have this A+ trade setup. You have a good thesis for where's it going to go. Is it going to have a blow off top? It's probably going to slam down. Where's around that range it's going to slam down? So you have it all mapped out. And now it's the question of how do you play that? Do you short it? Do you use options? And so it's like selecting the correct vehicle and strategy to express a trade that you see coming. And so that's been something really cool to watch, from your end, because, you've been shorting for so long and everything. So you can just get these crazy reads on them. But now that you're putting it into options terms, I mean, I think you can see, when you get these things that are going up 20x, 30x, 50x, and you don't need to take crazy risk to do it, but just kind of saving the options for those excellent opportunities. And then, just working on maximizing that when those come.
Yeah. And I think the other good part, especially being in an IRA, at least you can short in the IRA via the puts. But yeah, it's been an incredible kind of opportunity. I don't want to get, too much into them, because I've done that before where I've done done really, really well, and then you just piss it back. Done really, really well, and then piss it back. So I really want to just focus on these special situations, and that really aligns with the type of trading that I'm really focused on. The other good part about this is, just like with the coin entry, just like the NVIDIA entry, just like the SMCI entry, I can share that kind of stuff. On small caps, I'm afraid to share that kind of stuff because they get so crowded. You never know who's on the other side, who's playing against you, who's reading what. And, when you're in a 1 million, 2 million share float, all it takes is one major player to kind of throw things off. Whereas this, I mean, you could trade tens of millions of dollars and still be a small player. So I'd rather be that tiny, tiny, tiny fish in this big pond than trading outsized and end up becoming my own risk on something like that in small caps, which is pretty much the Wild West now. So awesome. Yeah. So for my trade on NVIDIA, when I had entered, I put some off the open as sort of like that feeler, just in case it were to flush, 40, 50 points, nothing that I really, really care about. And then I waited for sort of that high day clear out. I wanted to, one thing that I like to look for is, sort of that major gap, obviously, like SMCI, NVIDIA, that's like the first checkbox. And then the second one is, sometimes you get that first flush and everybody goes for that because like everybody's waiting for it. And all right, finally it's here, flushes down. And if you remember, we saw that on SMCI, but then immediately it started to ramp back up and it wanted to retest that prior level. So it almost did like a little high day clear out. And as soon as it comes back down, that's when I really, really, really focus. And each time it kind of tries to rebound and fails, I look for where that support level is. And once that breaches, that's it most of the time. So that's exactly what I did. I bought the 950s, the 900s, or 950s, 920s, and 900s. And the 900s went 23 cents to $2.31. Well, I made it until $2.31. I thought 1,000% was pretty good, but then I watched it go to $35, which is equivalent to about 15,000%. So I know what I did wrong, but I'm curious from your perspective, in a situation like that, I did exactly what you said, when it doubles, I let it run a little bit and then I shaved off. So it was a free trade. And I think what I made as a mistake at that point, when you have 1,000% runner, I probably should have kept 10, 20, 25% on and just see what it does. I mean, is that the way to, everybody said, you should have kept the flyer. Is that how you would have done it?
Well, I think it kind of, this is how I would map out that thought process. Like whenever you're doing really short-term options, I think you have to understand what you're trying to get out of the trade. And, is this a regular trade, or are you trying to capture, some real magnitude or an outlier upside situation? And so I think just going in with the right mindset is key, because if you're going in with the mindset of this is just a normal trade and, normal numbers, then I think we get into our normal routines of when we cut, what looks like a large amount and everything. And that's fine if that's what the plan is going in. But if you're waiting a week or weeks for something like this, you have a good read on it, and it's one of those A+ setups, and that you're going to try to capture some outlier upside on it, then I think that framing it that way, that like, in order to actually make zero date options work or worth it, you have to be able to maximize some of the upside, because that is what really gives their expected value. That's what keeps it positive. Because if you were to, always cut off your winners at 2x or 3x or 5x with a zero date option, then you're limiting the, we talk about tail risk, like when shorting these low floats, but you have tail reward too. And so if you are cutting off your tail reward, like those outlier 2 or 3 standard deviation moves, then that can lower the expected value of the options trade to begin with. So if you go in with the mindset of, I'm going in for outlier upside, and I really want to maximize this, then I think it's more a matter of, like you said, making the trade free as soon as possible. Get your initial capital off the table, and that way, if it all goes wrong, it's like you had a free shot at it. It's like you're getting a free option. So the first part of the trade is getting to a point where you take your downside off the table, you take your risk off the table, and your stress off the table for the most part. So as it doubles or anything like that, you can either sell half, or if it's working well, you can just put a trailing stop on half of it, so that you don't actually have to sell out immediately if it's working well. The thing with options is, people talk about like pyramiding into a position or adding to winners. With options, you don't have to do that, because the leverage is so great that it's doing that for you. Your position size might be increasing 2x, 5x, 10x as it's going. And so using things like trailing stops can really be a good way to capture something that's trending well, but it prevents it from going too far back on you. And so just a couple of ideas of like how people can get the most out of like these big wins is, you can use either trailing stops, you can sell every time it doubles. And so just kind of like reverse engineer. So if something ended up going 30x, if you had, let's say you started out with 100 contracts or 10 contracts or whatever it is for people, every time it doubles, if you're selling half or putting a trailing stop on half of that, you can still get multiple after multiple after multiple as it runs, and that gives you exposure to that real tail upside. So that's just a good thing to keep in mind, going in with the right mindset, making it risk-free and stress-free as quick as possible, and then really just seeing, how is it acting? Is it cleanly trending, and is it like not many headaches along the way, or is it like flush, big bounce, flush? And then a situation like that, it could be selling into that strength, and then with the anticipation of when it swipes back up, then possibly adding that back in. So keeping the initial amount and contract size that you were planning on, but more just optimizing, how's the stock acting, and then how can I get the most out of it? So those are really some things that I would think about when you're doing a great trade like that.
Yeah, I think too, there's 2 different kind of scenarios where, like, if I was trading it in my regular trading account, maybe I roll the dice and let it work more. But where it's in the Roth, like, the whole goal is to build that thing up. So when you do have it, you want to capture that. And I realize I missed a big opportunity, but at the same time, even that 25% left was still a pretty decent number, and it was moving the needle in the IRA. So I think that if I did it again, I'd probably do it in both if I could, or something like that. But awesome. So I think one of the things that I wanted to kind of talk about was sort of that setup that I used to trade that NVIDIA, basically high day clear out. And I used that quite a few times this week. One of them was on Rivian, and Rivian, I actually only traded this first move, this clear out move, but I wanted to kind of show how it comes back up, retest, exhaust out at a lower level, and then starts to fade off. And you can kind of see that on multiple charts here, where you also have the same thing on this Google, where this should look extremely familiar. This is the failed follow through setup that we've talked about a million times. But it's not about trying to find the top. It's actually letting it fail and letting it come back, and then this prior level of sort of congestion becomes the resistance. And then as that bottom channel becomes resistance again, that's sort of that secondary scale. So you'll start to see that as well on Coin. I made the same trade on Coin. And speaking of options, when I shorted this in the room, my entry over here on this exhaustion point was right around $2 on the, I think it was the 260 puts or something like that. But then they ended up going to $15 just on this move alone, and much lower liquidity. I didn't trade it very much size. Again, I'm still learning all these kind of things too. But same setup, and then of course the big one was the Nvidia trade, which again, you want to see sort of that gap up. You want that doubt. You want all those traders to kind of come in. Then they're like a little bit too soon, blow them out, and then wait for it to fail. And over here, I feel like a lot of people over position a lot sometimes. And you have that fear of missing it, but sometimes it's better to let it actually prove and fail to follow through, because you're not going to make it through that chop. Had this gone back and tested 968, you might have adjusted too much and then given up on the actual trade. So I'd rather see multiple retest and fail. We call them like swipe test in the small cap land, but multiple retest fail, because the more times that it holds, it's convincing dip buyers to buy and desensitizing everybody from the potential that it's going to break down. Then when it actually does, everybody panics at the same time. Everybody's extremely loaded on the wrong side. Their average is screwed up because they were dip buying because it's worked for the last 10 days or last 3 months. And then obviously everything comes apart. So that is one simple strategy, simple technical setup that I look for each and every single time. If you're good at managing risk, sure, then I don't mind trading into this first rip. I don't mind maybe having a little bit into this first rip. But if you know that you typically get in a fight and you don't know where to cut it off because you're sort of reacting into that parabolic, then you might as well just wait for this failed follow through setup to actually confirm, and then you at least have a set risk rather than trying to guess and ending up in a position where you're down $2 per share because you never ended up taking it off. So that is a simple strategy that I use. And then if you carry that over to small cap land, even back with OCEA last week, same kind of situation. I know a lot of people got smoked on this front side. Let it flush. You don't need to find the top. Let it flush, come back, and look for that sort of congestion spot where it's having an issue. And then also the congestion where it's actually has some support. So you've got like a supply zone and you've got a support zone. And you can see even right here, one like push back up to 635 and then slam down. So nice exhaustion candle. And then the last example is even on Friday, this AIMD, where if you can spot those supply zones and sort of where it's been kind of acting as maybe a little bit of congestion, support, resistance, clear everybody out, and then it ends up unwinding. So draw these lines on your chart. In my opinion, it helps out. Nothing better than something visually in front of you to remind you, hey, here's the line. What are you doing? You're going to get chopped up if you push any buttons ahead of time. So that was that. And one other thing that I wanted to talk about was recent sort of swing trades, because I've been talking about, I use the IRA for more of the big picture type swings. We are in that kind of market. And I just wanted to go through quickly. PBMD, as you guys know, this was a swing for me. And, these are the charts that are working. These recent, crappy IPOs that have just flushed down. In my opinion, they're only public to be trading vehicles at this point. And, it's probably just a bunch of deal guys doing different IPOs. They let it fade off. They probably get some shares. And then they end up running the entire thing. So in this case, this reminded me a lot of almost like an OCEI, just kind of a random rip, one day, and then it consolidates and it holds trend, and you can start to identify an actual buyer in the tape. So we had this first day where it started to ramp up, sat back. Then this day it ramped up, sat back. And that was the day that I was like, you know what? This is the chart that's working, and I'm interested in flushes into 85 cents. So that's when I initiated the trade. I scaled in some more the next day. And then we obviously woke up on Friday and it was going crazy, and added into that once again, selling far too soon. But If you want to see what that looks like on other dailies, SELX, HOVR, this is what's working in this market. So this is where my focus has been. So we'll get out of small caps for a minute. We'll switch over to ETFs. And I know that, one thing that I always tell people is make sure you have your list, right? When sectors are setting up, you should be out there finding like, all right, when semis pull back, what am I going to go for? And what are those names that would react? When AI overall, when Bitcoin overall pulls back, when oil pulls back, what are those names? And I always make a list of some ETFs, some of the biggest companies, and maybe even some small caps that, you could use, your anchor idea for. So I know you wanted to talk a little bit about the go-to names in ETF land.
Yeah. So when I'm looking at, a sector trade or like the anchor trades, you have a thesis, you have a couple of key players, and then it usually pulls, most of the rest of the sector, or at least a couple of key names. And so with something like AI, it's mostly been like the, NVIDIA and SMCI show for the most part. And so when you only have a couple of names that are running, those tend to be, the really good ones to go after. But when you start to have a more broad sector move, when you have, things like AVGO, AMD, like all these other names that are in the same sector moving. And, instead of trying to pick what's the best one moving this week when there's 5 or 10 moving, a lot of times the ETF is just the simplest way to go about it. And so like with the AI theme, SOXL, that's just the triple lever, the triple bull, semiconductor ETF. And so it's kind of like the idea of Occam's razors. When you have two different, similar outcomes, just pick the simpler way to go to get that outcome. And that's really what the ETF can do. And so you can have all the other names up on your chart. You could have NVDA, you can have SMCI all up there to, help to give you more information of like which of the components are helping to drive this. But when they're all moving, getting calls on SOXL at the beginning of this week, you were able to capture all the moves in NVIDIA, SMCI, AMD, like all these things that are running. You don't have to pick them or manage them as closely. You just, that the sector's running, that this is a simple way to go about it. And then you can focus on one or two things instead of, 10 things kind of at a medium level. You can focus on one or two things at a very high level. And so that's something that I like to do and focus on. And then, we use the NYCB example and like the KRE, which is the regional banking ETF. Like there's other ways to use the ETF too. And so this week we had NYCB had, a halt down. It was crashing to 170, and then it came out with news, and they're really trying to prop it up. So you had people inject capital, and it halted up. And so while you have something like this that's moving so erratically, you have KRE, which is through all the halts, everything. This isn't halting. This is just cleanly trending, up or down. And so a lot of times it's just easier to pick something like this. It's easier to manage risk. And so while NYCB is halting down, you can try to play that on the downside. And if you get news where NYCB is now halting up, you can play KRE calls and either, hedge another position or try to capture some of that. So the ETFs they're a very simple way, and a lot of times a more trading friendly way. You might not get as large of a move, but if you take into account the volatility, the uncertainty, the halts, the risks, like when it's all said and done, a lot of times they're a pretty good option for playing a trend, especially when you're using, options themselves.
That's the exact example when I think it was like maybe 4 or 5 weeks ago, you used that same exact example, that KRE, especially when something halts, you don't have that single name risk. And whether you were long or short, I mean, it was a disaster. Longs got absolutely demolished, probably, ended up bailing at the low. Shorts, this is an obvious, all right, we're just going to go to zero. They're going to get taken over like the other couple banks. And then all of a sudden, nope, actually it's going to open at 4. That's a hefty loss when it opens up there. So, like you said, if you were caught in an NYCB situation and you needed to kind of hedge that risk, there was maybe not a ton of time, but there is time to sort of hedge your risk or at least minimize maybe some of your losses by, as that news comes out on NYCB, it's still halted maybe for another 30 minutes, maybe it's 15, whatever, but at least you have that time to be able to initiate a position and maybe make the loss a little bit less.
Yeah,
Um,
definitely.
so, all right. And last couple of things, and I am going through these a little bit fast just because I don't want to turn this into the normal 2 hour kind of thing. So if you do have questions about any of these concepts, like for me, that Rivian example and NVIDIA, Google, that kind of failed follow through setup, that for me is my best kind of setup. That is exactly what I look for every single day on these types of trades. And this is the type of trade that I prefer to trade over these small cap type situations because we had an example of this LYT just this week, and it's a great reminder why look, there was money to be made for sure. Long side for sure, short side, yeah. And if you actually look, there was that same failed follow through setup that we just were discussing right over here. A little bit of congestion in this 17 range, and then a little bit of support in the 15-20 range, right? And then when it broke, that was it. But does that mean you behaved all the way up? So for me, micro kind of floats, they're just not my thing. I don't care. It requires so much attention. For yes, it can be a huge trade, but with Rivian and Nvidia and Coin and all these Bitcoin names doing what they're doing, you can make the same kind of money with a whole lot less risk. Because what if this just did a swipe and it went 20 to 40 and 60? Is everybody that was short gonna and crushed it gonna be saying the same thing? Probably not. So just in terms of longevity of careers, most people do hyper focus on these because they see those percentage gains. But in my opinion, it's no different than the zero dated options, where if you are consistently, playing them, it's kind of a fool's game, and you're going to end up getting, you're going to work hard, you're going to make money 8 out of 9 times, but that 10th time, you're back to flat on that outlier kind of squeeze. So, and the other thing about this current, this is one of the traps that used to get me all the time in like the COVID era, where AMC would do this every single day. I'd get so confident, and then it just swipe up, and I'd end up at big red to start the day and have to battle back. But you've got a situation here where you have LYT ramping up after hours, right? And then the next morning it ramps up. And then they just let everybody win, right? You're shorting, and they literally are. Whoops, I did it again. They literally are letting everybody kind of dig their own grave, because what do they got next? What's their plan? All of a sudden, they're just going to swipe it right back up. And now literally everybody that shorted it from, say, 4 a.m. on, is back to flat, right? And what you've done is, you're right. Yep. Flush. Yep. It's holding. Good. You have a good read on it. Scale. Good. Staying heavy. Scale. And now all of a sudden you have maybe 2-3x what you started in as, and you're not actually flat here. You're back to your original entry, but now you've got a problem. And if that ends up holding on, obviously as it did, the problem gets big, and the problem gets big fast. So this was always that trap, and literally it's just short digging their own grave, because they let everybody just sell, and then bring the support in and have fun with everybody. So just be cautious of those. I've been very much risk adverse on the micro floats. It's just not my thing. I've seen, I've been in circuit halts before. I've had outlier losses on those before, and it's just something for me at this stage in my career. It's just not. I'm not really interested in having that kind of a risk. So once you see a few of these, or you get that PTSD from those circuit halt levels, you never want to do it again. So then the last kind of thing that I wanted to talk about was sort of this NKGN that we had, this nice trade. And one of the things that I always look for is, how is the volume trading, where I had 100 million, maybe I had like 30-40 million shares at the time, but is it under? So this is the chart support, and so I use 270s. I wrote that in the room as sort of that guide as a trigger, where basically anybody that's shorting into this big gap up or all morning under 270s. Look at the volume that, it faded down. If you go back through each of these days, it's like 7,000 shares, 19,000 shares, 20,000 shares, right? So anybody that wanted to kind of sell would have sold, and anybody that's shorting at 240, 250, just because it's up a lot, they're actually shorting, I mean, pretty much at 52-week lows on this name. And then as it gets over that prior level, it starts to, squeeze everybody out. So that was a really nice long trade there, and ended up squeezing it in a big way. We also had the same thing on this BREA, but I wanted to kind of show one that really, really worked well and one that, didn't. And so very similar, where it did the trap in the 180s or so. But the most important part is kind of identifying where that supply zone is, right? So, I'm in there and I'm buying on the flushes. And then I actually sold some at 230 into this rip. And thankfully I had, one of the best things you can do is have those wish orders out there, right? Where you like, all right, if it swipes up to this level, I'll get taken out. But otherwise, the trade wouldn't have worked. The only way that I get bullish, the only way that I want to stick with something is if this 225 level starts to build and head higher. And I think that's what you saw on, something like NKGN, where it swipes, and then you can kind of see how it starts to build over that 270 level. At first, 270 was the top, 270 was the top again, and now 270 is actually the support. And I don't think a lot of people were anticipating that. And then once that level breaches, that ends up becoming the trigger to the downside. And obviously the trade has played out at that point. So at this point, I'm actually long this one still. I bought the pullback, but at this point, I still believe that the 270 level is the spot to have an imagination. I do think we could have a T+2 type of move on it. But I wanted to kind of show you, one that worked and one that didn't, and sort of how to be aware of that. And then the last kind of thing that I've been kind of looking at is, these types of setups where you kind of have this load day, right? And it reminded me, this one, of CDIO. And if you guys remember this one, it had all these loads and then the move came. So I look for these types of situations. NBSE is another one. You can see like a load day over here. And it doesn't mean that they're all going to go. For me, this $1 level is like a big spot that I need to see kind of break. That's where it's been kind of peaking out at. Could be 98, could be $1.02, whatever. But right around that $1. But the point is I call these almost like a transitional day. And if you guys remember on this NKTX, right, you had this huge volume day. And I always kind of keep that on watch and see how it, ends up panning out. And as it starts to break over that prior level, you can see the move really, really started. So I always try to focus where all that volume is. I call it a transitional day, where they kind of clean up the tape and then they let it fade back, and then they're present, they're buying. And I think you saw that even, something like, keep on doing this, SE move, where there's this huge volume day, and then each day it flushes down, absorbs, flushes down, absorbs, and then that secondary move comes. So I think that's it for me till we get into the main watches. I don't know if you had anything else, Chris, that you wanted to add for the week.
Not too much. Just a quick recap on the CVNA, kind of trade, or the update with that. We touched 90 this week. So that idea of, just over multiple timeframes, the option market expecting a higher move, having the short interest on it, having a squeeze out market, having the technical setup. And so these confluence trades, it's just something that to keep in mind. And a few weeks ago, we were talking about how this could take a couple of weeks to play out. These big moves, they're part of a market cycle. And so it's not like a small cap where this all happens within 3 days or so. This is a long process of, over a couple of weeks or maybe even a month of getting that, ramp up, just everything's aligning and it just keeps going. And so it's a good one to just keep on radar, so when this, as long as the thesis is still in play, when it does have those sharp dips, it trades between usually like a $5 level. And you'll see on the options chain that those are usually the two largest levels for that week. So it might be between 70 and 75, and then 75 and 80, then 80 and 85, and then 85 and 90, and then back down to, 75 to 80. So just keep in mind these like ranges. And then when you're looking for an entry on it, look at what is the low end of that range. And then that's really where you can have a good risk level to try to play this for a weekly option or a couple of weeks out. So I still think possibly by next week, or I think this will play out before the end of the month, but I'm thinking as soon as next week, we could have that, ramp up towards that 100 mark, really have it speed up, maybe get a halt up, and then, the trade will be set to kind of unwind similar to NVIDIA or SMCI. But again, the difference with NVIDIA and SMCI, they have real buyers, real fundamentals underneath that are driving this up. And so even just like SMCI, when it had that big flush, a couple of weeks ago, you look where it is now. It's back higher than all-time highs again. And so it's just a testament that these moves are real, the buyers are real, as opposed to something that's just a more of a structural driven move up without the fundamental buying underneath it. So I think it's good to keep CVNA on watch, and then to just kind of study moves like that, or at least understand the thought process of when 4 or 5 different things come together. It can really give you an edge of, not necessarily predicting, but having a good idea of this is very possible. And if it's in play and if it's agreeing with what I think, then what's the best way to, enter a position on that? And that's at the low end of that range that we talked about. And then when we do have that eventual, hopefully if we get it, that blow off top move, then understanding, that once it flushes down, it's going to be much different than something like NVIDIA when that flushes.
Yep. And I actually had the line on my chart. I save all the lines that I put on the chart, but that 83 level, just as sort of a reminder, no matter what it does, if it's not heavy under 83, then there's no real trade. And I think, like you were saying, that 90, 100, 120, I mean, that's all possible. But one thing to keep in mind is as long as the SPY continues to, at least hang around and melt up, obviously if we drop down, then the speculation side of things is going to fail here. But we haven't had CVNA was one of the first, LCID at back post COVID when these things started to do those first big rallies, and then we went into those circuits. CVNA was one of the first ones that I had seen do that, and I was like, oh man, these things are scary when they're going from 35 to 45, 50, and there's not much liquidity. So you definitely want to be cautious on the front side of the move. But one thing too, with a move like this is, of course, just like you don't underestimate the front side and how high it can go, once it does blow off, don't underestimate how low it can go too, because that is a lot of the exit. It's exploiting some sort of inefficiency of players offsides. And when that happens, that's going to unwind to the downside. So it will actually pull back, and then you're going to think the trade's done, and then it's going to pull back, and you're going to look back after a week or two and realize that it's $20 lower. So that should be a good one, of course. And as you said on NVIDIA, that's still going to be one of my main watches for the week ahead. As we get into this, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. But like Chris was saying, I think we're going to have a lot of good weeks here on NVIDIA. I do think it did pull back to about 850 after hours. If I was to look for something great, I don't know that it would go this far, but I would love a 780 to 820 kind of range for a flush, and then maybe a 50 to 70 kind of reversal. We still do have a catalyst. They have a GPU conference. I think it's March 17th to 20th or 21st. So there is still that catalyst. So I would definitely look at the SMCI chart and notice, it did flush, but every flush ended up kind of getting soaked back up. You'll notice that all the wicks ended up a little bit higher each time before it went to the next breakout. Also, a lot of people, no matter how high this went, there's a lot of people on the sidelines. And there's a lot of people that are looking to get exposure into AI. So as much as we look at it and we're like, this is crazy, like it's run up so much, there is a lot of money on the sidelines looking to put it to work in this space. So dips will get absorbed. But of course, if it stays heavy, that doesn't mean that you just hold on, and you need to have risk management. Next main watch for me is going to be RIVN. And this one ideally kind of pushes into that same level. I'd be cautious getting too aggressive on the front side, of course, but I want to keep this on watch. It's just like the daily drivers on PLTR. When we start to get 100 million daily volume, which might be like 4 or 5x of what it typically trades, and the range, these things are just really, really nice opportunities. You can size in, to obviously to what you're comfortable with, but there's not really a shortage of liquidity here. Whereas if you were to do the same thing on a small cap, you know how bad it can get quickly. And I think the last one is going to be coin. And, I would chalk this up with MSTR and coin. MSTR and NVIDIA and SMCI, same kind of situation. Of course, it's going to continue to head higher with Bitcoin. But, I'd rather trade this. I'd rather trade Mara over something like MSTR just because of liquidity. But like Chris was saying, and getting your ETFs ready. So when Bitcoin, I'm not sure I'd go directly to a Bitcoin ETF. I'd rather trade something like a coin. I'd rather trade even maybe an MSTR over the ETF. But a coin, a Mara, a Riot, a CLSK are going to be my focus names. So let Bitcoin go 70, 80, 90K, whatever. But the next point where it exhausts out and it flushes, have your go-to list ready. And that's my list. Everybody's can be a little bit different if you like different price ranges. But I do think we're going to get some really good action on these. So over to you, Chris. I know you were watching NVIDIA as well. Who isn't? So what are you thinking on this one for the week ahead?
Yeah, I think it's going to be extremely similar to SMCI, where, you had that after it went down further than people thought. You had that after hours fade. And then a lot of people were anticipating that maybe 750 bounce or something on SMCI, and it went down to what, like 650 or something. So we could have a situation where with NVIDIA, it flushes down to 800, and then everyone thinks that's the bottom. Then maybe you get a dip into the 780s or 750s, like you were saying. But I think that once you have this kind of flush out and this reset of the tape, it's taking out all of the call, volatility, and it's kind of resetting the option tape. And so those are actually good for the longevity of moves as long as the underlying trend is still in place. And, a big way that these correct, and even though that they are kind of dramatic moves when they do flush, it's really just, you're going back to prices of a week ago. And so it's just the options market, they get ahead of itself. You have, people who are like the weak hands, they pile on. As long as there's no dips, they stay in there. And then once there is that dip, which happened again on a Friday, which no coincidence, it's with the options. And when, that the vol and also the price pull away and all those hedges roll off. So these are sharp dips, but they're really just, back to prices of a week ago. So it's best, especially for a swing trade or like a longer term view, focus on the key variables of what's driving it. And that is, the revenue growth, the earnings growth, the margin expansion, the market share, things like that. And then once we find out, I'm sure that at some point we will get a piece of information that takes some of those away, or it makes it look like it's gonna, stall out. That's when you could have a real reversal. But until then, I see this still trending up as long as SPY and things like that are also agreeing. So NVIDIA, possible dip buys. And if the whole sector is moving well, then I'll be looking at SOXL. And again, that's the semiconductor 3X bull ETF. And so if AMD, AVGO, SMCI, NVDA, if all those things are moving up, it's just a lot of times it's easier to just play the ETF or something like that if the names are moving. But like Nate was saying, if in Bitcoin, if you only have a couple names that are moving really well, Coin, Master, and then you have like Mara and a couple other ones that are going the wrong direction, if it's split, then the ETF is not the ideal way to play that. So you just have to size up every sector and you look for confluence. If everything's moving in the same direction, the ETF is usually a good way to go. But if things are split all over the place, then individual names are usually the way to go. So other than the AI theme, we talked about maybe a month ago or so, Tesla, of that having relative weakness, and things like interest rates hurt that, and he has legal battles and all these other things that are just kind of weighing on the stock. And so this has been a great hedge for a downside. So when you have that split market and like SPX or SPY is kind of flat, and you have some names are really weak and some names are really strong, these are great names to go to when they are acting weak. So that's that, and Google. Those were both good examples of relative weakness over the last few weeks. And so if you're looking for names that are moving better than the index, like instead of SPY or SPX, these are good go-tos for puts. So again, I try to look for relative strength, relative weakness, and then just look for ideal entries of how I'm going to trend something until there's like a real capitulation one way or the other. And then I get more into the reversal or mean reversion mindset. So that's pretty much all I have on watch this week. And then the last thing is just CVNA. Again, same thesis in place, and just looking for that trend to continue and looking for ideal entries. And then hopefully we'll get a big day where either the calls go crazy, and then we're going to get closer to that blow off move where we can play the backside. And one final note on when those big turns come, with things like NVIDIA, when those have that blow off or that big flush after, the 0 date options work fantastic on that because it's going to be a move for one day or a couple of days. But when you have something like a CVNA, when that makes a turn, so when that has a big blow off move and then possibly stalls out or slams down, sometimes it makes more sense to look at longer term puts on something like that. Because if you get something a few weeks out, and this goes from 90 to 110 and then slams down 105 and it ends up over the next month, if it ends up at 60, if you have those longer term options, you have time on your side to let that work as opposed to needing it to happen in one day. So it's just something to keep in mind as that, hopefully that parabolic comes into play. Look at what's going to be the ideal time frame to capture a move that you anticipate coming.
Right. And on that note too, I was trading the options with a friend of mine, and he took like the following weeks, and those were around like $32. They ended up going maybe like 90 to 120. So they still got the 3 to 4x, but had it hung around, you're not losing, 100% right away. You still have time on your side. So you've got another week for it to play out. Sure, you're going to decay. But like you said, it's just not going to be as dramatic. So, the way that and maybe you can correct me if I'm wrong, but the way that I look at it is if I was going to trade a NVIDIA and risk X, I mean, that risk that I would have taken on that trade is sort of the option amount that I'd want to take. If I want to risk 5K, I'm going to buy 5K worth. And if it goes to 0, it doesn't matter. Yeah, you lost 100%, but it's the same risk you would have taken on the actual stock itself and the risk that you had, kind of set.
Yeah, totally agree.
And then the last thing on the NVIDIA too, I just because I like to question and learn myself, but same deal with when it melts up and the premium's so big, it's true when it flushes that the put sellers also get offsides, right? So then they have to go to the market to sell, which then makes it flush even lower than you would think. And we turn to like, oh wow, this thing's really getting hammered. But then we always see them, swipe right back up on such low volume. But it's just because the same thing that took it up on the thin market is taking it down on the thin market, and it's pretty much you got to go to one extreme to the next extreme, and then you kind of end up in the middle somewhere.
Yeah, that's definitely what happens. And just a 10-second recap of the NVIDIA, the call options, they pile up throughout the week, and you have all that hedging going on. And then, people are buying the 1,000 calls, the 1050s, and all of a sudden the stock stalls. And now all those calls and the hedges start to unwind, and it goes the other way. And then as it falls down, people are like, oh, this is just like SMCI. They start buying all the 800 puts and everything else.
Yeah.
And then once the stock stalls that way, then it comes back up. So you're exactly right. And I think that a good thing to remember is with these moves, especially on Fridays, the best moves tend to happen. You'll get that morning ramp up, but it's like the first hour or two after that, stalls out and slams down. That's the cleanest trend because you have mostly the calls coming off and the put buying. So that's like a double force of making it a clean trend. And then once you get later on in the day and people start to buy more and more puts, then that trade gets less attractive because then it could swipe back up.
Right, because that first half an hour, you still have all those dip buyers, and like every single dip has worked for the last 3 weeks. So why would anything change? So you're actually getting them loaded on the wrong side a little bit for a half an hour, and then it finally breaks down that prior low a day, and that's when their first kind of decision time comes to either add more or finally bail on the trade.
Yeah.
Awesome. All right. I forgot t-shirts. Green Lizard 99, Marcus Trader 4762, Mischief Fiasher 9979. Butchered that. Those are all t-shirts for you guys. And then Father Chaos 03, you've got the icon meals for this week. As long as you're in the US, Todd always sends out a box of food for the week. So email me, webmaster@investorsunderground.com. Thank you, Chris. Appreciate it as always. And we'll continue to switch up Sunday videos. You'll see Stan probably next week. You'll see me and Chris. And let us know your feedback. And again, we went over a lot. We tried to keep it under 35 minutes. So here we are at 50 minutes as usual. But I went over the Rivian and the NVIDIA and the high-day reject thing rather quickly. If you guys have questions, leave a comment. We can always rehit it next week. If you guys have options questions, I've been doing this for years and I don't really talk options. So Chris is your man for that. Anything that you like to see, we always like feedback. So make sure you like the video, make sure you leave a comment, and we will catch you Monday in the room.
Have a great week.